The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Live Beginners Course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Enjoy your demo trading. It is a learning practice. There are price action skills to learn, which we discussed in lesson 2 with the Japanese candlesticks. There are, of course, technical analysis skills to learn. So it is a very enjoyable experience as well. So let's discuss this then in some detail. Now, what I have here is just the Euro US dollar price action chart here. This is what we're actually going to focus on for the remainder of this lesson, as opposed to what you can see here with the second price chart. Now, immediately, I would assume this might shock you a little. There is a lot of technical analysis here, but just gives you a little insight to how you can actually analyze these markets. It's the same market, of course. We're looking at the same price action in terms of the daily price action for both left and right markets here. It's the Euro US dollar. However, you can see we have a whole array of different indicators, both above the market overlay and below the market. The MACD, which shows you convergence and divergence of price. The RSI, which is a relative strength indicator. We have some lines over the market, providing us with some long to medium to short-term trend structures. And again, I do realize it's a lot to take in. I just wanted to highlight how you can actually look to analyze price as opposed to the simple price action trading. So that's effectively what we'll do in this lesson. So let us look at our US dollar and let us define some of these opportunities. Again, one of the focus of, I believe, lesson 2 was the battlefield. And what we attempted to do is define it as an interaction between buyers and sellers who come into this market, who deliberate price action and actually create price discovery. So that is effectively what we see here. So if we zoom in, we can actually see some of these very, very interesting price structures that can lead us to look for opportunity here. So let's pick a few out here. So let's just move back over the price action here. We can see immediately what sticks out is a few spinning top candles and reversal hammer candles here. So what I'd like to do is just identify these as potential opportunities. I'm going to use my red pen here because they're actual sell indicators. Simply by looking at these 3 candles here, that can give me an indication that this market does not want to trade up. Okay, it does not want to trade up. So let's discuss, what's happening in each individual day in this instance. Of course, the market at one particular time is showing some strength. It's trading right to the upside there to the high, and then reverses straight off the high to actually close right where it opens. So that's significant. And then we can see the market trades down to the downside immediately after. So the day after gives us potentially a very short-term opportunity to capture maybe 100 pips. So again, that would be a good trade just based on the structure of that. Then we get effectively the same trade as well with the inverted hammer. It trades to the upside and then reverses to the downside in the same day. Technically very significant. And guess what happens then after? It just rolls straight over to the downside, again showing some weakness. The next time we see some very strength to the upside, again, it trades up just like the previous 2 candlesticks discussed and trades down to show us yet another inverted hammer. We can argue that number 3 is actually the most significant in terms of dictating an overall term structure or price structure. Why might that be? Well, because it's much lower than these candlesticks 1 and 2 here. In terms of the overall price movement, it's much lower, so it's within this remit here, closing below again. And then that's when we see effectively a larger move to the downside. So that's simply by looking at the structure of these 3 candlesticks. I'm just going to remove some of this so I can go through it again. These 3 candlesticks here to show us that the market does not want to trade to the upside. It actually shows us some weakness or a retaliation from sellers to push this market to the downside. And that's exactly what happens there. So there's potentially one trade that we've we've speculated on just by looking at the structure of Japanese candlesticks as well. So let's move across to more relative price action here. We can see the market trades down here for a period of time and then creates a little structure here which doesn't give us any real price decision. This, you could argue, is technically significant, that it did want to trade down but was reversed again, and that gives us more of a dragonfly structure to the upside. However, I would say in terms of an overall trend, we can take this candle here as our very technically significant candle. So why might that be? I'll ask the audience here, why might that be? And I can see some answers coming in already. Is certainly because it's our first really engulfing candle that we've seen in a long time. We did see a very strong candle to the downside as well here with this candle, so that most certainly did cause the market to trade lower, but then it didn't really do anything after that. It created this little price structure that didn't show us any continuation of movement. Then this effectively is significant because it shows us a level of reversal. That's the point I would like to make, that it's actually reversing right up to almost new highs to where our sell-off initially started. And then we see, obviously, if I zoom out on the price action, we can see something much more significant in terms of how the market wants to trade over the long term. So here's exactly where we see, and I'll just change the color here so we can see the bullish move to the upside. It's here with this candle. It does trade right back up to the new highs. And that effectively, the reversal of this is our lower low from the price action, and we see that starts a long-term trend. So whether you're trading at the short-term down trade that we see here, just maybe for a few days, or whether you're deciding to look for a price speculation that you can get a long-term trade-off, it's all in the price action. That is one difference to, I suppose, technical analysis in terms of using all the various different indicators. And again, even though we're on a beginner's trading course, you can see how conclusive it is that you can often become a price action specialist just by looking at the Japanese candlesticks and trading off them. Again, most like to trade in shorter time periods as well, because there's volatility in the forex pairs. We can zoom in on a 1 hour chart and you can see how this trends to the upside and then reverses. When we go to more speculative price action, you can see how this could be very profitable for traders to trade. We can see it's not doing anything for a long time. Then we see something very significant with a very big move to the upside. The markets, we could buy from this high. The market stays up there for some time again, so we could look to buy here, and then we could look to take profit at the top here, and potentially look to reverse this trade here from a break of these lows, or here again to take profit on these lows. So there's very speculative trading. This is short-term swing trading in 1 hour price action. You might be able to be in a position for 2 or 3 hours for potentially 40, 50 pip winners. So it's all going to be indicative of how you observe the Japanese candlesticks themselves and how you'd like to trade different time periods. So let us move on then to actually discussing these different time periods across different assets. So we've looked at a currency pair there. Let's look at the Nasdaq. It's an equity index there in the US, and it is of course synonymous with the big tech stocks like Google, Facebook, Amazon, very big tech stocks there globally. So this is our daily price action, and it is showing us something more significant in terms of how the markets are performing. We are, of course, when we zoom out in the price action, we are of course in a very strong bull trend that we can see to the upside. So that would tell us that if we want to take long-term positions in this market, of course, potentially we would want to become buyers. However, there's always going to be opportunity when fear and panic set into the markets. And that's something we've seen in more relative price action. So just by looking at the setup of some of these candlestick structures, could we potentially pick some buy trades or some long trades if we wanted to trade in the overall structure or direction of the market? Absolutely. So what I'm going to do is some very simple price action analysis, just again based on the price action that I'm seeing in front of me. So we see a very sharp sell-off from point A here, the whole way to point, I would say point B. And if we're looking to have an assessment of recovery, or when the market's looking to trade purely on a technical basis, certainly this candlestick here is the best significant example of giving us that level of decision, because it's effectively that hammer candle, the bullish hammer candle, trading the whole way down, trading back up, and closing at relative highs. So we could look to buy the market in and around this price here. That's our buy entry order, and we just enter at that price there. As you can see, we have 1. So as we follow this price section up, 3, 4, 4 bullish price action candles consecutively or in a row. So that would give us a very good risk reward straight away. So again, simply by trading off this one candlestick, that could give us the sign or the signal that we can actually get long this trade and look to recover to new highs. So that's one potential long trade that I would most certainly indicate to take. Then we could see this is a bit of a rejection here. We have something similar. We see price action moving up to the upside, and then we see it selling off yet again. And then we see potentially this trade as well gives us a decent risk reward if we're looking to buy up to new highs. Again, it's the same structure as the previous candlestick discussed. So we could look to buy this market and put our stop loss just below the new low for via a 2-to-1 risk reward to new highs. And as you can see, the market did pull back. We are avoiding this volatility with our stop loss in a good place, and then the market shifts to the upside, and currently it would be in profit, of course, this trade. So again, just 3 examples there that I've discussed, looking at the Nasdaq 100, looking simply at some buying opportunities across this market. And again, there's nothing too technical about it. It's just quite constructive, just by looking and understanding the context of these Japanese candlesticks. Again, not to say that we can take opportunity on the sell side, and that's really the beauty about trading CFDs or leveraged products, that we can take both sides of the markets. So here again, we have a very long time trend. It just looks to stall here, but again, that doesn't provide us with anything too significant. We know how strong the markets are. What is significant is, of course, this candlestick here. We'll just notify it as candle 1. Why is that? Well, because it is effectively our engulfing Mariposa bearish candle. So we'll tick that, and we'll look to potentially place a sell order at this low here. So if we were to do that, of course, we would see some volatility just within the day, pulling back to this range. But again, that is effectively when we see the market change and change the whole trend structure and trade the whole way to the downside. So that would be a fantastic trade, just basing it off the candlestick for that one day. And again, because of the volatility, the fear and uncertainty showing, really related in that candlestick, it follows and continues with momentum. And we look to capture a 2-to-1 risk reward within the next day, really. So that would be a fantastic trade given how the market moves.